Disney. Now in this one, Pete, we've got Chapek was the head there for 3 years, and it was a rough 3 years.
Yeah.
I mean, they were down over those 3 years with the market up, so that is not good.
Yeah.
And one of the reasons may have been the strategy for streaming, because I remember when it came out, because I got it for free for 6 months with my Verizon, and not what they did also for people that weren't Verizon stakeholders or whatever, they gave you a $7 entry when Netflix was charging 12 and so forth. Way too cheap. Obviously, that ended up hurting them. They raised it by a buck. This is 2019 and 2021. I think they raised it by a buck. Now they're going to $7.99 for the ad-supported model. I mean, I think that says it all. They offered it way too cheap. It was a loss leader. They decided to stop losing.
That was one of the very many mistakes from Chapek. He absolutely, in every way, it seemed he just couldn't get it right. Bob Iger is back. He needs a succession plan. They need a succession plan. They've got to figure out while Bob Iger's there. He signed a 2-year contract. They need to find out who's really in line. They say there are a couple of folks out there, maybe the CFO, some of these different names. I don't really like that. I think that they have to go through the process this first year, figure out who it's going to be, and then in year 2, start to groom him or her into that position to make sure that they can actually move forward. By the way, $52 billion in debt. That's unbelievable. If you take the cash portion out, still $41 billion in debt for Disney. That's something that happened under Chapek. That has to change, and I think they will address that as well. In any way they can, Disney will be a better company, I think, going